With the trend, you can look at the moving averages. You can see here barely in the background, the moving averages are pointing down. Okay, the moving averages are up here on the left side of the chart, and now they're down here. Okay, so obviously the trend is down according to the moving averages. So once you've got all of this out on a piece of paper, and it's in front of you, it's going to force you to do something that's very, very important in the markets, and that is slow down. Okay, most rookie traders have this belief that if they trade more, then they're going to make more money. And I think what winds up happening is once you start getting a little bit of knowledge about the market, you start looking at each one of these little wiggles as potential profits. And the reason why is, number one, because you're gaining an understanding of the marketplace. You start to feel like you're getting an understanding of the marketplace, and then you start seeing opportunity everywhere. And the reason why is because when we're looking at this chart now, here, everything on the left side of the chart is very easy to see. It's blatantly obvious. I mean, you may look at this and say, oh my goodness, look at this. I mean, that triangle pattern was obvious here. Man, look at this little dipper. That was perfect. And as for confirmation, oh geez, I just would have waited for, I would have seen that the market was reversing right here, so it popped up. And then as it came down here, I would have just gone long above this high here. And then, if I hadn't seen that, I could have just gone long right here as it came back down. Okay, so you start seeing all of this stuff. But then when you're forced to watch it on the, like I said, I think it was yesterday, when you're forced to watch this hard right edge where reality is, and price is ticking back and forth, well, now what do we do? What is going on right here? Is there a pattern? Is there something to do? Well, this picture that we have here is a whole lot different than what we see back here. Okay, so that dynamic of knowing some stuff about the market, understanding what can create opportunity in the market, but then also having to deal with the fact that we don't know what's going to happen next. So while it may be obvious where the trades were in the past, okay, there was a trade here, there were trades over here, maybe even a trade over here, one right there. Okay, so you start thinking, man, look at all this opportunity. You just have to slow down and realize that some of these trades look obvious in hindsight, but while they're happening, you can't see them, if they were as big as the broadside of a barn, you wouldn't be able to see them. Okay, so just trust me on this. Try the checklist. Okay, write down, and I gave you a model. You can go back and review the video, but put this stuff down. And it's going to force you to really focus on the key elements of a trade. And I say this for a couple of reasons. I had a couple of emails today from some people who've run into a rough patch of trading, and I want to talk about this right now. Several people, 3 people to be specific, have emailed me and said August has been tough in one form or another. That's what they said, that this month has been a difficult month in trading. Well, hopefully everybody has seen the video. I think it was here on the 26th. It might have been on the 27th. It might even have been the 28th. Anyway, it was at the last part of July. And you have to remember what I said back then was, anytime the market has a huge move like this, I don't care if it's down or up, you've got to watch out for the market to get knocked sideways. And look, that's exactly what happened. Okay, yes, this is a big, big range, but look at this. The market really, it had a brief spike above that line,